Today we're looking at NVIDIA, and right now I've got the 30-minute chart up, and what we're going to do today is we're going to look at price action and how we can trade through the day if we're not sitting in front of the computer. I got a question from one of our viewers that he asked that what time frame should he use when he's doing a day trade but doesn't have the ability to sit in front of the computer and watch what's happening and what time frames to use. So we're going to address that question today. And as always, we always want to know exactly what's happening. So let's go back and let's look at our monthly and see that everything's moving up at an upward pattern here, heading up, and the trend is positive. It looks good. Weekly, we just started, so here's the brand new candle for the week, and we've seen the last 3 weeks have been actually just a continuation of this deal here, but we just had a little 4-week pullback here. And then we look at the daily, and what do we have? Upward momentum, so everything looks like it's on its way up, and that's what you want to do. You want to look at time frame continuity. Which way is this thing going? Which way is your stock going? What you're interested, what you're looking at. That's what we want to know. So let's go here. We'll get a better picture of what's happening through the day. I know this was today. This was June 7th. And what we saw was this dip. And where are we at? We're about 8 o'clock my time, and I'm on the Pacific coast, so I'm 3 hours behind. So it'd be, 11 o'clock New York time. And at this point, what we saw here was a reversal. This is a reversal, okay? This is a classic reversal to where you see a trend of it starting to go down. You see the trend heading south, and then you see the bounce back. And then, of course, we wait to see confirmation, and then we see what happened after that. But let's just say that you're here, and it's 11:30 New York time, 8:30 Pacific, and you're seeing the formation of this candle, which is dips all the way down to here, down to the bottom at about 687.69 in that ballpark. Then it starts to push back up, pushes up, and then a little bitty pullback here. You see that? Just tiny little wick on that candle right there. So what you see is a little pullback. So okay, let's see what's going to happen. Well, next candle over, 9 o'clock, 12 o'clock noon, lunchtime. New York, we see a little dip, and then boom, up. And then again, a wick formed again, a little pullback in, a little, probably some profit taking there. Okay, then some people getting scared and getting out of the deal, and then of course going up, and then kind of sideways for a little while, then up for the rest of the day. So where do you get in? And what is the strategy you're going to use for this trade? Remember, none of this has happened yet. We're looking at this candle right here. So let's just say this candle is starting to form, so it goes down and starts forming this shadow right here. Where do you get in? What you want to do is always, when you're looking at it, if this is a possible reversal, or anytime you're ready to get in, you want to look and make sure that this next candle passes the previous candle's high. Okay, right there in that red line I just drew right there. That is where the next candle, this one, the next in your time frame, whatever time frame you're trading, has to surpass the previous close, the previous high on the previous candle. Okay, so once it gets there, get your trade ready to roll because it's moving. So watch it, and once it precedes that, go ahead and go in. So you would possibly go in at 694.98, 94.89. Got it? Because it surpassed that. Immediately set your stop, okay, at that candle's low. Okay, you want to get out with as least blood as possible. So for me, and I know a lot of people are going to say That's too short. Put it on the previous candle's low. We will do that eventually, but on this one here, after we came off such a huge run here after the dip, we don't know for sure if this thing's really going to go up the rest of the day or the next hour, next 30 minutes. So what we want to do is we want to cut our losses as low as possible. So here at the base of this candle at 693.68 is where you're going to put your stop. 693.68. Okay? If it dips down to that level, boom, you're out. And what did you lose? What did you lose? You lost $1.20. Is that correct? If my math is correct, it's $1.20, somewhere around there, $1.21, something like that per share. You can live with that. Okay? The deal with trading is real simple. It's okay to lose a little bit of blood. We don't want to lose body parts. We don't want to be stuck in a trade where we're just getting killed and slaughtered. We manage loss. That is a sign of a good trader, managing your loss. So you're in here at 694.83. You got your stop. If it heads down there below that, it stops out at 693.68. I believe that's where we had it. Okay, let it ride. So we know it went down. We're going up. You're in your trade. You go up. Okay, next candle over. What do? Keep that. You want to keep that loss there at your stop at 693.68, or you want to move it up higher within here or whatever and minimize your losses. That's fine, but still, overall, you're still only losing $1 and some change here. You want to adjust it, that's fine. But if you do that, you may stop yourself out of the trade before it's necessary. So we're on the next candle. What happens? It dips down, but does it go below the previous low? No. Does it go above the previous high? Yes. So what does that tell us? We are on an uptrend. Okay, so what happens? You stay with it. The next candle forms, and it's a red candle, so we know what happens, that it went up and it went down, but where did it go? It didn't go down to your stop. If you would have adjusted your stop to the bottom of that candle, that would have been a wise move. Move it to 695. Okay, if you would have moved that candle or moved your stop, if you would have moved that stop up to there to 695, I'm sorry, wrong one. So we're in here, but if you move your stop, to here, now what? You're ahead of the game. You're already up because you got in where? You got in at 694.89. Worst case scenario, you're going to make 11 cents on every share. That's your loss, is a positive 11 cents. So even though you're not making money on it, even if this thing gets stopped out, you only lost 11 cents a share. Okay, back to the trade. We see what happens. It goes up, it comes down, but it never gets to your stop. You're off and running. It pushes back up again. Okay, next candle forms. You don't have to move the stop, but you could if you want to move it up to there, then move it up to there. Okay, it's real simple. Let me get rid of that thing there. Move your stop to that point right there. To the previous candle's low. Okay, move it to there. Now you're at 695.33. Okay, you get stopped out there. Guess what? You're 50 cents. You're 50 cents plus. You see what's happening here? As the stock is moving along through the day, you're adjusting your stops as you go. So you're at work. Okay, I can't sit here and watch this thing all day long. I am on the 30-minute time frame. So if I have 30 minutes, I can look at my phone or whatever and adjust my stops accordingly. okay? Or if I work in front of a computer and I can just glance over at my chart, make your adjustments as you go. This is a day trader that cannot sit in front of his computer. This is what I'm advising you to do, but I cannot advise you because I'm not an official trader or anything like that or work in it, but this is what I would do, okay? This is me. This is what I would do. Adjust my stops all the way through, all through the day. Okay, so adjust my stop there. We're at 695.50 or 44. Next candle, boom. What happens? Goes up, tests the top, gets pushed back down. The bears are in and they push it down, but the bulls are still there holding support. They're still right there holding it up. Next candle starts there, takes off. Same thing. What do? You want to adjust your stop? Okay, where are you going to adjust it to? Here? Okay. The bottom of the previous low, right? Or the previous candle. So there we go. There we are right now. Now your stop's at what? 697.09 or 08. Worst case scenario, what's the deal? You're making $2 if you lose. If you get stopped out, you're making $2 a share. This is the best position as a trader to be in because worst case scenario, you're going to make money. And that's a good place to be. Okay, back to the trade. We see what happens. Goes up, test, comes back a little bit. We had a little bit of pullback here. Goes down. Boom. Up. Back down a little bit. You want to adjust your stop again? Go ahead. Adjust that stop to the previous low. Go to the next. Okay, boom, 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 boom. Want to adjust it again? Go ahead. What's happening? See what you're doing? What you're doing through the day as this trade is going on is you're gaining money in your loss. If it ever gets down here and gets stopped out, now you're at $7 or $700. Now you're at $6.18 or 12 cents. I'm sorry. Gain per share. Worst case scenario, you're making $6 per share. Next candle. And me personally, I would go out because I don't like holding overnight, because who knows what can happen with these techies, who knows. But in a day trade, that's what I call a day trade, and I'm out. Okay, and I'm out. So possibly went down and goes up and then back. Ideally, of course, you want to sell at the highest. But me personally, I think I would have probably taken it about right here after it went down and then started pushing back up somewhere in this area, about 704 for about a $6 or $7 gain on each share. Good enough for me. It's good enough. Okay, boom. That's your trade for the day. Let's look at the previous day here. Same time frame, 30 minutes. Same stock, NVIDIA. What do we have here? We have an explosion on the 30-minute. Okay, me, when I see this, I'm going to go to a little shorter, maybe a 15-minute on that, and then see exactly what in the world is happening here. Okay, so what do we see? Explosion. Okay, now I'm on the 15-minute. Okay, so what do I see? I see this break above the previous. Okay, so where am I? Rule? What? Surpasses this. All right. 693.98. I'm in. Previous, where am I going to put my stop? Am I going to put it way down here at 683 and take a $10 loss if it does stop out? No, $10 is too much. What I'm going to do, worst case scenario, is possibly at the base of where this started. Okay, at 691, so I can only take a $2 loss. So I put a stop here. Okay? My stop's right here. It's a $2 loss. I can manage that. It's okay. Goes up, comes down a little bit, forms a little wick. Okay? What do I do now? Keep my loss there. My stop there. Why not? Okay, again, what's the worst thing that's going to happen? If it comes all the way down here and stops me out, I'm at $3 loss. Manageable. Can live with that. Okay. Goes up, comes down, but it doesn't test it. It's still on an upward. Do you see that this candle broke above the previous candle's high? Even though it's red, even though it finished red, it is still an upward, it is still a bullish signal because it broke above. It never broke below, causing another low. So we're still on a high. Next candle, down, up, back. Now what? Let's move our stop. Okay? We have the feeling that this thing is going to move up. So let's move our stop to the previous low, the red one right there, right at 696 and 1 cent. We can breathe now because no matter what this stock does, we're going to make money because we got in here at 693. Worst case, we're out at 695.95, right? Okay. Boom. It starts. Pook, you're out. You're out at 695.95, but guess what? You were in at 693.86, so you almost made $2 a share just on that. Just on that. Okay? So then you take your loss, or your gain, you got stopped, but you gained. You just take it, and then you just watch, and then you want to enter in back again with the same mentality. Go ahead and ride it out until you get really stopped out. You can do it like that. Or most people are going to tell you go ahead and keep your stop down here. Okay? Which is fine too, because guess what? You're only taking a $3 loss there, so that's manageable again. Okay? Then you could have rode this thing all the way up here and adjusting your stops all the way when you're here at this doji. You would have probably had your stop right here, right? And guess what? Tested it and then finally stopped out here at 702.53 when you got in at 693, almost a $10 gain. Do you see what's happening here? We're managing as we go. Again, this is just the 15, longer term, 30 minutes, 30-minute trade. It's harder to see when it's on a longer time frame, but it's easier to judge. It's easier to manage when you're not in front of the computer like that. So if you see something at the very beginning of the day starting to form like this huge candle, break it down. Go to the 15 and check out what's happening. Then make your entry. Then come back out and look at this in the 30 and see what's happening. Because you would have came up with the same deal. You would have came up with the same stop. You would have rode this one out. This candle goes up. You would have put your stop here and you would have stopped yourself out for a healthy gain, $10 or whatever per share. Do you see this? Do you see how this works? Managing your trade, going in with a plan is your way to successful trading. Going in blind and not know, oh, I'm in, and then you have no exit strategy. You're not managing it. You're setting yourself up to fail. You are the Titanic that's sinking, and you're in panic mode by that time. You're just rearranging chairs. You're going to sink. It doesn't matter what the chairs look like, how the furniture looks on the Titanic as it went down. You're going down. Stop. Get a plan in place. Look at what you're doing. Get your stops in place. Get your entry points set, and you can only do that by price action trading. I mean, you can look at all the indicators all you want in the world, but it's not as consistent as looking at real-time action, looking at what's happening at the moment. And it takes time. It really takes time to educate your mind and your eye to this. But once you get it, it's easy. It's stressless trading. So I hope you understand this. I mean, if you don't, reach out to me in the comment section below. Send me a comment, and I'll be more than happy to walk through it with you and make another video. This video was all around a question that I got. Somebody asked me a question, so hopefully you will understand this, and this will help you trading in your future. Again, train yourself. Learn how to do this if you want to do this for a long time. If you want to do this for extra money, that's great. You're going to do this for that Lamborghini, good luck, because there ain't that many people out there doing it that'll be honest enough to tell you that do this for a trading that are not driving Lamborghinis. Anyway, reach out to me. Hope this was good. If you understand it, give me comments below. Love to hear from you guys. All right, this is it for this time. We'll catch you next time.